What is going on, guys? What is going on? Good to see everybody. Good to see everybody. What is going on? It feels like it's been a while since I've been live, huh? I don't know. It feels like it's been a month, but I think I was live last week. So, all right, you guys are all here for FOMC. Well, hopefully you're here for this channel first and then for FOMC. But we have Jerome Powell himself. He's going to be talking at 2:30 p.m. Eastern. However, we are going to actually get the what is this? Breaking Hunter Biden pleads not guilty. I thought they released the FOMC early. No. We are going to be getting the interest rate decision at 2 p.m. Eastern. So that will be in half an hour from now. So actually in 28 minutes. Actually, let me just tweet out, and then I will say hi to those of you that are in the chat. Let me just tweet out that I'm live now. Live now. Come through. FOMC. Copy. Cool. All right. So let me say what's up to those of you blessed. What's going on? Levi Vargas. What's up? Yuval Oz. What's going on? Long or short? Already Yuval is prematurely trying to prepare himself for the FOMC meeting. Yuval, that's not how it goes, bro. Long or short is not how it goes. You are going to get wrecked both ways, because we will likely see huge spikes in price up and huge spikes in price down during the Fed meeting, which is why you don't hold positions during the Fed meeting. Somebody tell Yuval this. It's not as easy as long or short, right? It sounds like you want to gamble. And you know my take on gambling. I'm all for gambling, but I'd rather go to Vegas. The drinks are free. It's a lot funner. You get to meet people. If you want to gamble at your desk, don't do it on the markets. We're all here to make money. I'm not trying to give money back to the market. So, Jeremy Reina, what's going on? Also to Yuval, I always go short. You do on FOMC? That's interesting. You must suffer a lot of drawdowns in the meantime. Does he start on time? Who are you talking about, Chris? Me? I am on time, fool. Thoughts on thoughts. Very good question, Bill. Very good question. Chinese stocks skyrocketing today, Gashi says. All right, let's talk about Chinese stocks real quick. So in June, I put out a thesis on why it is time to start investing in Chinese stocks. Not investing for the long term, because I personally don't like to invest in certain governments where they have too much control over what goes on in the corporate sector. But I did say that for swing trading opportunities, this was starting in June, China is starting to look like it's about to wake up. So to your point, Gashi, that is something that we were well ahead of schedule on. And guys, hit that thumbs up. There's 700 of you here and only 64 likes. You know why we need to hit that thumbs up? We want people to find this stream because we need people to find good information. My bet is we get the rate hike and then the Fed will be data dependent about, yes, Ricky James, you and I are there together. We're going to get a 25 basis point rate hike. That's almost a certainty. If you guys look at the probability of a rate hike, 99.6%, actually this might be the highest that I've ever seen for a rate hike expectation, 99.6% that we get a 25 basis point rate hike, and a 0.4% that we get 50. So there aren't any bets that we actually get no rate hikes, right? Now, if we take it out to September, because the Fed doesn't meet in August, there's Jackson Hole in August, but there is no FOMC in August. So the probability in September is that the Fed's rate remains unchanged. If they do a rate hike now, that they will not do a rate hike in September, 77%. 22% that will do a 50 basis point, or sorry, 22% that will do a 25 basis point rate hike in September, right? But right now, most bets are that this will be it. So, but I agree with you, Ricky. I don't think that the Fed can actually, even if they're planning on it, Ricky, I don't think that the Fed can actually come out and say, we are going to do one rate hike and then pause. They have to say we're going to do a rate hike, and then it's data dependent. Now, obviously, inflation has been dropping like a rock, or the rate of inflation has been dropping like a rock. We went from 9% last July to 3% year over year CPI, right? That's the fastest decline that we've ever seen. So, why is the Fed actually wanting to continue to raise rates? Well, two things. One, it's because PCE is still kind of sticky. Services inflation, even though it has come down, is still kind of sticky. And then also wage inflation is really high right now, and the Fed wants to tamp down wages. So it's not all about CPI, right? 25 baked in. Yes, Fernando, 25 is baked in, but what the Fed says isn't. And so what the Fed says usually is what moves the needle. But yes, you're right. 25 is baked in. I mean, again, it was 99.6 yesterday, 96.5 today. These are marginal bets that are changing, but most likely a rate hike. All right. Steve, what's going on? Roberto Elizondo, what's going on from Chicago? What's going on? Z said it 99% bearish. I didn't say 99% bearish, fool. No, don't put words in my mouth. I didn't say 99% bearish. I said 99% the Fed is going to hike rates by 25 basis points. I didn't say 99% bearish. Jesus Christ. There must be positive mouth of words by the Fed. The Fed will likely say that they are going to be data dependent. Things are trending in the right direction. They're going to be data dependent. What's your favorite shorting ticker? None of those. Space Monkey Mafia. I don't like inverse ETFs. Inverse ETFs are made to lose, right? If you don't believe me, let's take a look at one. Let's take a look at your, what's your favorite one? SQQQ. Why is SQQQ? Why was it at $520,000 and it is now trading at 18? Because it has to keep reverse splitting, right? The American stock market is made to go up. So most days the American stock market is up unless we are in a bear market, right? Hold on, sorry, let me do this so that you can see. My bad. Hopefully you can see better now. The American stock market is made to go up. So inverse ETFs are one of the stupidest things to trade. Sorry, one of the stupidest things to hold. If you're just trading it for 1 or 2 days or something, fine. But look how dumb this is to hold. It literally is designed to lose value over time, and it has to keep reverse splitting to stay alive because the American stock market, like I said, is designed to go up. So since 2010, if you count all of the reverse splits, SQQQ used to be 521,000. And it is now trading at 18. That is how many times it had to reverse split in order to stay listed, right? Look at SPXS, same thing, right? SPXS was trading at 165,000. Again, if we are counting all of the reverse splits, it is now at 13. So this is one of the dumbest things to trade. You are much better off trading futures, which we are trying to get more people to do. And you are much better off trading. Secondarily, you're much better off trading options, right? And in my view, probably vertical spreads as opposed to single options, because that way you don't really get hit by theta decay. Both of these things we are currently learning in the personal mentorship. If you guys recall, and you're fans of this channel, this is where we take 20 traders, only 20 traders, and go through an intensive 8-week course going all over technical analysis, trading, options, futures, taking them from A to Z. If you want to be on the wait list for the next mentorship, that link is in the description below. That will be for the fall mentorship. Again, we're only taking 20 students, so you do have to apply. But if you are really interested, make sure you put your name on the wait list. And if you want to join the academy, where you will get our thesis on stuff like the China market, as well as our day trades, make sure, and as well as our option strategies, future strategies, etc., click that link in the description as well. This is where we went over, for instance, my Tesla covered call strategy, where we made 90% overnight on Tesla covered calls after earnings, just reading how Tesla usually behaves for earnings. Anyway, back to this. So right now the S&P is down 1/3%. NASDAQ is down 0.75%. And the Dow Jones is pretty flat, 0.08% down. Now, I don't typically trade before FOMC. I don't care to trade before FOMC. You know, and when I say before, I mean day of. Yesterday, obviously, we were trading. We caught a nice move up, and we caught a nice move down as well on the futures. However, I don't trade, you know, in the minutes leading up to FOMC. I didn't take a trade all morning. And you know what? Look at the smile on my face. It's a stress-free smile, because trying to trade before FOMC, usually, like your best case scenario, you're going to get sleepy price action, right? And your worst case scenario, you'll get moves that take out your stops or that don't make sense. So for me, I'd much rather wait for FOMC, let the dust settle, and then take trades. Once in a blue moon, I will trade during FOMC, depending on if we already have a violent move up or down beforehand. Then I will try to see if there's liquidity taken, setting up for a potential reversal, for instance. Another trade that I'm looking at, that I'm very close to sending out soon, is what is going on with the 2-year Treasury. The 2-year Treasury is the one that is the most sensitive to the Fed rate hikes. And by the way, if you guys are just joining the stream, there's 1,000 of you here and only 192 likes. Click that like button. Let others find this stream, please. So I'm very close to potentially getting back into the 2-year futures. As you'll recall, to me, this is the easiest trade after the Fed actually stops hiking and actually gets into a cut. Then we will likely see the 2-year Treasury futures skyrocket after the Fed implements a cut, right? So potentially looking to get back into this soon. Let me get to your questions. And we do have FOMC in 15 minutes. Vegas has Poirier as the favorite at -162. Yeah, I mean, he won the first fight. Poirier won the first fight, so not surprising. All right, shout out from South Africa. What's going on, Sealy? What's going on from South Africa? There must be, okay, let's see. He's going to hike, and then how bad things break or don't will decide the next, in my opinion. It's not based on the market. Hustle smart. Redwood. It's not based on the market. It's based on the economy and the wages, right? JP pause now, crash market 0.5 in September. Good to be here. No, that's very far from what's going to happen. If Jerome Powell wanted to crash the market, he could do it now, right? That's not the objective. The objective is to crush wages, and the objective is to crush the working class. That is the objective, because the working class actually spend the most money. Abdel Wadud, if you keep spamming, I'm going to put you in timeout. There. Are you bullish or bearish, bro? Pardeep says, I don't know, bro. What is your time frame, bro? Is your time frame a month? Is your time frame today? Is your time frame 10 years? I mean, if you're asking me in general, the U.S. stock market is bullish in general. There are many more. On average, every year is an up year on the U.S. stock market, right? Z, do you think we're going up? Mike Wolf, again. Ooh, this question needs context. Going up when? Today? Who knows? How would I know that? Will AMC have another short squeeze? We can take a look at that because I was saying that, oh my God, Roman Kachuk donated $50 to St. Jude's. Roman is always donating and watching. I appreciate you, Roman. Thank you so much for your donation. That means a lot, obviously, to the people of St. Jude's, to the kids at St. Jude's, first and foremost, but it means a lot to me if that is worth anything. So thank you so much, Roman, for always donating first and then always watching second. Appreciate you. Thank you. How are your knees doing? Randy Gomez. What? Wait. Do I know you? How did you know that? Are you just saying in general? Or are you referring to a specific injury? Because I was playing ball about a month ago and I smashed my knee on the court, so it wasn't a non-contact injury. I actually thought that I fractured my patella bone, my kneecap. Is that what you're referring to? If that is, that's pretty trippy. If it's not, and you're just referring to working out, then in general, thank God, knock on wood, my knees are doing great. Randy Gomez, I broke your ankle? Yeah, we played b-ball. Where did we play b-ball? Either your real name is not Randy or you're just fucking with me. Why Microsoft is down even after good earnings? Thoughts on this? Well, bro, it's the same thing. Why did Tesla drop on good earnings? One, it's one day, right? Two, how would it not, like, if we ran up on Microsoft, if Microsoft is up, I mean, obviously anything can happen on earnings. Look at Snap. Snap tanked 20%, and they had their best earnings season in God knows how long. But this year, Microsoft is up 70%. When is Microsoft, which is traditionally considered a very slow-moving stock, when is Microsoft up 20% in less than a year? 70% in less than a year, right? So obviously there's some profit taking here. And Microsoft always beats out earnings. Apple and Microsoft, I don't remember the last time they missed earnings. Make it trades. See, Roman, you started a movement. Let me shout everybody out. Roman, you started a movement. Good man, good man, good man. Roman donated 50. Make it trades donated 10. Appreciate you, Make it trades. Thank you so much. Levi Vargas donated $20. Appreciate you, Levi. Thank you so much. Appreciate you guys. Do you think now VIX is at a time low and good investment? VIX is not an investment. VIX will get you murked. VIX is, people look at, this is how I know people just started trading in 2020, and there's nothing wrong with that, okay? It's not a derogatory thing, but it's just, this is how I know you started trading in 2020. When they look at the VIX and they're like, oh my God, the VIX is 13. It's manipulated. How has it tanked to 13? Take a look at how the VIX trades in a normal market. The VIX is routinely trading at 9 and 10. The VIX, this is not sorcery. This is not manipulation. The VIX routinely trades at 9 and 10. Why? Because as I said before, the American stock market usually goes up. On any given day, on any given year, the average movement for the U.S. stock market is up, right? So why would traders of SPX options continue to slam bearish bets which in turn will affect the VIX, right? The more bearish bets or the more expected volatility, the higher the VIX will be. But if everybody's bullish, why would they slam and expect more volatility on the VIX? Why would they slam the VIX? So this is how I know that people started trading in 2020, because 13 or 14 seems low to them for the VIX. Look at the VIX historically. The VIX routinely trades between 9 and 10. It's very common, with obvious spikes, throughout based on events. Any economic events or political events, you'll have these spikes, obviously. But the range that the VIX usually trades is actually a lot lower than it is now. And the VIX needs to move insanely for you to make any money on trading. The VIX is one of the best money loser trades when it comes to options. Like it really has to rocket past expectations. Like the VIX, if you bought calls on the VIX and it went from 14 to 15, you would still likely lose money, right? The VIX, if it went from 14 to 20 and say you had the 15 calls, then you will make money, but it has to make an outsized move for you to make money, right? So Jerome Powell would have to come out today and take his thing out of his pants and slam it on the table for the VIX to shoot up and you to make money, right? Obviously, I'm being facetious, but he would have to do something out of the ordinary for people to now bet big bets that there's upcoming volatility. You say futures are safer than options. When will the futures course be coming out? Well, I have good news for you, Karen B. And I'm glad that you asked this. The reason that I have good news for you is because of this. How to trade futures. If you look up how to trade futures, guess whose video comes up as the top one? Your boys. How to trade futures. I did this almost a year and a half ago. Click on this and start there. No need for a course. Like, this is for free. Just click on it, watch it for free, rewatch it, take notes. And I will likely come out with a futures course that, current Academy members will get for free, because you get every course past, present, and future for free if you are an Academy member. So I will come out with a much, much more in-depth, advanced futures trading course. But in terms of if you're just beginning and you don't know how to trade futures, you don't pay for anything. Don't pay for anything, bro. Well, in this case, not bro, Karen. Well, I don't know. Maybe you identify as a bro or a sis. I'm not here to judge. I will say, though, that you don't need to spend money. Just watch that video. It's for free right now. Again, we are going over this in detail as in phase 4, which is going to be weeks 7 and 8 of our personal mentorship. And again, if you want to get on the wait list for the fall, 20 students only. That is currently how many we have in the current mentorship as well. This is different than the Academy. This is an immersive 8-week training program that I teach personally. So it is almost like one-on-one time with me for 8 weeks. And we keep the class size small to make sure that we could track everybody's progress. But it is, going to be week 7 and 8 in here as well. But get on the wait list for the fall if you're interested. All right. What can I do in GC1 if Fed are positive? What do you mean, Suhaib? I don't know what you mean. What can I do? I don't know what you mean. Do you take a rest day from working out? Muhammad says. Nice off-topic question. Obviously there are days when I rest. I don't plan rests, if that makes sense, Muhammad. I'm very, very big on not planning rest days. Because of life gets in the way and you get busy and shit, right? You are going to take a rest day naturally. And so if I plan for a rest day, but then, say I plan for a rest day on Friday, but say tomorrow I get busy and I don't train tomorrow, then, I'm now taking 2 days rest. So I just train until life gets in the way. And there's that one day that out of the week where I just absolutely cannot work out or my body feels a little broken. But I don't plan rest days. I've never heard anybody say this, so I'm going to claim it as an original philosophy. But yeah. I hope his real name is Randy, Gunmetal says. Gunmetal. Me too. Randy's a good name. Also, I know your real name, Gunmetal, but we'll keep that a secret. Thoughts on Tesla for the next month? I think Tesla is a very easy candidate to sell puts on, and I'm very bullish on Tesla, not for the coming month. I do think in August, and I'll talk about this, but I do think we will see a summer pullback. Nothing too drastic unless we have a black swan event, but I do think we see a summer pullback in the markets. August, September is usually the worst month in the market as well. Z's a hooper. Send Addy so your followers can get runs. Are you in Southern California? Jeep 420. Let me know. How do you think gold will react? I don't know that gold has big reactions on 25 basis point rate hikes. So, yeah. I don't trade gold when I'm looking at rate hike. When I'm looking at FOMC days. 3 minutes until FOMC. So, let me answer your questions before I get on CNBC's chart. Randy is how he feels. It's not his real name. What do you think of BIX at the historic low levels? Marianne, hopefully you're talking about VIX and not BIX, which I assume you are, and I just went over this. These are not historic low levels. Do you see any tradable recurring patterns for FOMC? Yes. Usually, when the rate hike decision is out, if at 2 p.m. Eastern, the price goes down, then after Jerome Powell starts talking, the price shoots up momentarily. But the wicks are so violent that a lot of times you will get stopped out. Hello from Spokane, Washington. What's going on? Are you considering a trade on Meta later? I'm considering potentially a neutral trade on Meta. Yes. Word up, Roman. Yes, word up to Roman for sure. What do you think about the VIX at historic low? It's not at a historic low. Borisov, appreciate you always watching, always donating. Wow, shout out another $50 donation. Roman started the trend. Everybody else, all of you good people are following. Thank you so much, Boris, for $50. Alan Sev says, Allahu Akbar. Hopefully in reference to Boris's very generous donation and Roman's very generous donation. Make It Trade's very generous donation. Levi's very generous donation. As well as Duwan Kim's very generous $10 donation. Thank you, Duwan, so much. Anonymous, whoever that is, $20 donation. Appreciate you. Zero DTE kills the VIX. Yes and no. That's kind of a misconception. It does contribute to it, but it's not the reason the VIX is down. Again, it's because the VIX is historically trades low when the market is doing well. I will go over AMC, Dean. Tanmay Amin, thank you so much for your $10 donation. Thank you so much. And the people of St. Jude, thank all of you guys as well. So appreciate you guys so much. These are the most donations that I've seen back to back to back in a very long time. Shafiq, what's going on, brother? Thank you so much, man. Thank you. All right. Let me go over the... Let me go over the... the rate hike. Let's see. If you guys get it, if you guys get the rate hike announcement first, post it in the chat. Because I'm going to keep refreshing this until it comes out. We will keep this on deck here because this will be the channel where Jerome Powell will talk. Okay. Not a surprise. Breaking news. The Fed raises rates It doesn't say by how much, by the way, that takes interest rates to highest level in more than 22 years. Let's keep refreshing. Obviously, we're expecting 25 basis points. Let me see if Market Watch has it. Not CNBC. Let me watch CNBC Live. My God, I hate when it makes me do this. Better now than never, I guess. All right. Here we go.
Still, they're leaving it out there. They're still trying to sound hawkish. And as you noticed, I mean, Steve didn't mention any.
An important word there, and that is unfortunately. I think we're going to hear the same thing in the. Why do you think that's unfortunate? And then I'll get the reaction from our panel.
Because this is a game. They're playing this game of monetary Jenga, where we don't know what's going to knock the economy into recession. But if we're headed, for 3% inflation, what's the big deal? I'm sorry, but there's, if we're 8% inflation and it's run away, that's fine. That we need to deal with it. But if it's 3% falling down to 2%, it's not worth threatening the economy with recession. And to be honest, we don't know what moving from 0% rates to 5.5% rates over a short period of time, we don't know what that will do to financial assets, to the whole economy after 15 years of zero rates or close to zero rates. So I think they're playing with fire, and they don't need to, and that's why it's unfortunate.
What is so surprising? I mean, what is so surprising though is that we really haven't seen too much of an impact so far, at least when you measure it by the stock market and asset prices, right? I mean, the fact that we haven't seen those lag effects.
Well, yes, because we had a great recession back in 2008. If we have a recession, it's going to be baby recession. So we're looking at baby recession if we have one, and also low inflation eventually. And of course, if they do overshoot, we'll end up with even lower inflation down the road. So I think the stock market's able to look past this, right, this business cycle. I just don't think we need to have a business cycle to get there.
All right. Our panel's still with us. Bob Pisani and Rick Santelli also joined us now. Rick, I'll go to you here. Not too much reaction in the rates, but what's your reaction to the statement?
Yeah, no, not much reaction to rates. And with respect to the statement, I don't feel I'm walk away any smarter. To me, the issue is hot or hold. Guns hot or hold. Do they skip? Do they go passive? Do they let the markets work? More active approach? I think the latter is the route they're going to end up taking. And everybody's been bringing up data. I like to look at all the percentages. It really makes this somewhat easy. Non-farm jobs from the first half of this year to the last half of last year are down 21%. Private payrolls in that same period are down 32%. We were talking about CPI earlier. Yeah, 9.1 down to 3. That means a 67% drop. If you look at core, it's a 27% drop. These are real numbers, and it's hard to argue with. I agree with David. We have no idea for sure where inflation goes, but it certainly seems as though it is going to continue to come down. And when we look at some of the year-over-year numbers, I understand there's some nervousness there, but I also see a definite move in the month-over-month numbers, especially on the inflation side. People point to confidence as one of the strengths. I understand that, but that's skewed. Confidence always seems to follow the stock market. So that's what we're left with. The stock market, why are investors fighting the Fed? Are they? And if they were, it makes it a whole lot easier to fight it now because they're definitely in the 7th, 8th, or 9th inning, and it's going to be that much easier for investors to now think, hey, money markets look pretty good, but are they going to continue to look good? Have we missed the boat? FOMO with regard to missing the stock march up higher could be the 13th day today. I think that the central bank is buying itself time, and whether they actually start hiking again next year, I can't tell you. But I'll put another bet out there. I lost because they hiked this time, but I say they're done for the rest of the year.
Bob Pisani, as they used to say on the exams in college, react and discuss.
Yeah, what's interesting here is we're not getting any knee-jerk reaction. Normally we move 10, 15 points on the S&P 500. We were down 11 when we started. We're down 8, 9, essentially the same. I think the important thing is everybody understands Powell's not going to close the door on rate hikes, but I'm not sure one rate hike in November or any time is going to make much of a difference. I think what matters is keeping inflation moving in the right direction. And Stephanie, as always, has got her eye on the right thing. That PC on Friday, that's what everybody's talking about down here. So we've got the headline on Friday, 3%. If you get a 2 print on there, that is going to get a lot of press. If you, on the core, it's 4.2% is the estimate. If we hit in the 3, anything with a 3 in front of it, that's going to get a lot of news. So moving in the right direction. I think the risk at the press conference is Powell does not endorse the market's viewpoint. The market's viewpoint is the soft landing and rate hikes are essentially near ending. If he pushes back against that scenario, that could be a little bit of a problem. Look what the market's doing. We're coming in hot on stocks. We've got a record run on the Dow. S&P is at a new high. Valuations are high, and we're entering a seasonally weak time of the year. It's a little bit of a problem for the stock market. So the risk here for the market on the press conference is definitely to the downside. One final point. There's a whole school evolving down here that's arguing that disinflation in the third quarter is going to be the biggest problem for the stock market. Companies are already saying they're having problems raising prices and they're cutting costs to deal with the fact that their margins are getting squeezed a little bit. That's sort of a disinflation story, and that's a potential real headwind.
All right, so just to summarize, I actually like that we're watching this panel right now. So they raised rates by 25 basis points. You see that here, as expected. But you see some people on the panel say, if inflation has come down to 3% year over year, why is the Fed risking a recession? Well, as I said before, it is because of wages. If you don't believe me, look at this. Well, you guys would have no reason not to believe me, but I guess that's just a saying. And then I'm going to get to your guys' questions in a second. But I posted this before. But if you look at the Atlanta Fed wage growth tracker, you will see that we are at 15-year highs, at least on wages, right? So whether the Fed is helping out the corporate sector by tamping down expectations on wages, right? I don't know if, during the pandemic and shortly thereafter, especially for you guys that are in mega cap tech companies. I know a lot of people that work at Facebook and Microsoft in Silicon Valley and other Silicon Valley companies. They were getting signing bonuses like they were athletes, right? Like some of my friends were getting $500,000 packages just for putting their names on, just for signing their names on the offer sheet. They were getting stock options, unlimited vacation, et cetera, the best healthcare. And so definitely for the longest time, the employee had the power. So not only is that, do corporations not like that when it gets out of hand, but also from an inflationary perspective, it also leads to inflation. Guys, there's 1,800 of you here. I appreciate each and every one of you. Be sure to hit that thumbs up so others find this stream. 1,800 of you and only 400 likes. It's not for ego, I promise. It's just because I want other people to find this stream, and I'm confident that the information we put out is the best out there, right? The most objective, the most data-driven. So please hit that thumbs up for me. And I will get to your questions in a second. Appreciate you guys. But that is the reason why the Fed wants to increase rates and tamp down wages, right? They want to slam wages.
In your altitude level, that's what he's trying to do. He's not had as much success in the stock market, which may indeed, Melissa, be one of my questions, is how much concern the chairman has about the loosening of financial conditions as evidenced in the run of the stock market. But at least when it comes to the area that he directly or more directly controls, which is the short end of the yield curve, what I think he's trying to do is to keep those yields high while backing off and not letting the market begin to price those rate cuts in. That would really create stimulus from the stock market as well as from the bond market.
I mean, since the June meeting, the 2-year yield has gone up 40 basis points and the S&P 500 has gone up 5 percentage points. Stephanie Link, how do you think that factors into the Fed's thinking? I mean, in a way, markets are telling us that the worst is behind us and that things.
So as Steve said, he wants to keep rates high in the bond market. Now, why is that? Well, because if bond investors are expecting that the Fed is actually going to cut rates, then they will start investing in bonds, right? And if in short-term bonds, short-term treasuries. And if bond investors are expecting a rate cut and they invest in short-term bonds, short-term treasuries, then yields will go down. And if yields go down, what does that mean for the economy? That means that everything from houses to cars, et cetera, gets cheaper again. And if it gets cheaper again, that might stimulate the economy, that might stimulate spending. So they want to slam wages and keep those rates up, which is why I'm not yet investing in the 2-year treasury. Not yet, right? Because the Fed is actively trying to keep that down. Let me get to your questions real quick, and then we'll get to a chart. Remember, we have Jerome Powell in 19 minutes. 19 minutes, folks. All right. Going to open a futures account. Do you use technicals or macro to play into things? Okay. Do not start trading Buffalo Bill if that is your first question. Open a futures account. You have to apply for a margin account. You have to apply for a futures account. And then take it slow. Paper trade. Okay. I don't use macro at all because I never hold futures positions overnight. I'm day trading with futures. Right? Can you look at Google chart? Yes. After I answer someone's, 2 people have asked about AMC, so I'm going to answer that. Gunmetal, Z's community is among the very best without a doubt. Appreciate you. Christoire Ricci says, so happy to be in Z's community now. What a difference from other groups. I've been a part of professional but fun. Thank you so much. Yes, we focus on A+ setups only. My goal is not to send out as many alerts as possible. Any monkey can do that, right? I can send out alerts all day and give you guys a 50-50 win rate. That's not the criteria, right? And then flash the one that wins, right? So if I take, 20 trades today, I'm going to show you the one that got me 200% and be like, see, my group is awesome, even though I lost on half of them or more. But we really try to teach people how to fish. My goal is to make you actually want to leave the academy. So sad to say, because I don't like to see anybody go, but that is my goal. My goal is to turn you into a more independent trader, where you can just learn how to fish on your own. That is the crux of it. To Wayne Hilton, hit that like. Yes, guys, hit that like button. Appreciate you. Sonar, good morning, Z. Genuinely happy to see you. I'm very happy to see you too, Sonar. All right. Think the market stays flat with 25 until the press conference? Yes, obviously. All right. Let's see. Are you wearing a Leeds jersey? Come on, bro. You can't tell what this jersey is just from the top of it? You think Leeds has 5 World Cup stars? Here. Let me make it closer. That's not a Leeds jersey, mate. Nothing against Leeds. Can PSG win Champions League in 24? I mean, they have yet to find success with the Champions League. Do you have a pink jersey? Oh, do you mean Messi? Fuck, Messi is killing it right now. I mean, just in 2 games, he scored 3 goals. He's absolutely killing it right now. Would you short NVIDIA? No. Why do you guys want to short NVIDIA? These questions about, longing the VIX or shorting NVIDIA drive me crazy because it's obviously I know that they come from inexperience, but it's like you're looking at NVIDIA chart and you're like, oh, NVIDIA go up, must come down. Really? Well, people have been shorting it since it hit $200. It is not trading at $454. You would think people would learn by now, right? Don't you think everybody's looking at this being like, I can't believe NVIDIA's up here. This is crazy. Wow. Can it go up more? Maybe I should short it. No, you shouldn't. All right. Remove that gambler's fallacy out of your mind that, and this is something that I try to hammer in the academy, that there is no, it's gone up too much or it's gone down too much. The market will continue to blast your expectations on either side. When Tesla was at 101 back in January, do you think anyone could imagine that Tesla would be $100? Now people will cut off their, let me keep it PG. People will cut off a limb to get Tesla at $100, right? Same thing on the flip side. Nvidia can go to $1,000. You think I'm kidding? Like Nvidia had less than a 50 billion market cap a few years ago. It's now at $1 trillion, right? Nvidia can go to $1,000. So don't underestimate the market, all right? Don't underestimate the market, and don't just try to short things because it went up. Like, you want to see market structure breaks before I ever take a crack at shorting Nvidia. It hasn't broken market structure since January, right? So you want to see a definitive market structure break, and it make lower highs and lower lows before even thinking of shorting it. Otherwise, there are much better trades out there. Christopher Herdman, nice to be able to catch one of these live. Normally have to watch it later on. Hi from Scotland. What's up, Christopher? I've been to Scotland many times. I've been to Glasgow, the Isle of Skye. I've been to Edinburgh. Really, really dope country with amazing people that have, I would say, one of the best senses of humor. Like, I like the tough love that Scottish people are very used to delivering, at least from my experience. All right. Jerry Stevens, appreciate your $20 donation. Thank you so much. Thank you. Anonymous donated $5. Thank you to whoever that was and stayed anonymous. Appreciate you as well. Will the market ever care? Care about what, bro? It was priced in at 99%. Care about what? Everyone knew it was coming. Now, what we will be waiting for is this. Now, this motherfucker is like Thanos, right? With the snap of his finger, he can make half of your gains go away. So that's what we're waiting for. Anonymous, thank you so much for your $10 donation. Appreciate you. Let me see. I'm into learning. Fire. Appreciate you, Leo. How can we access your course? Leo, first link in the description, bro. Do it. First link in the description. Absolutely killing it in Miami. Yes, Tom S. You're talking about Messi, right? What's crazy is all these allegations that you hear when it comes to Messi. Like, oh, these goals are scripted. Bro, that guy is a freaking football genius. Messi's a football genius. And even the fact that Inter Miami was smart enough to sign Sergio Busquets, who, by the way, still looks like he's in his prime, which is crazy. And the fact that Messi only really needs one other elite midfielder like Sergio Busquets, and then a subpar striker like Robert Taylor, who is looking like Ronaldo at least the last game. Not Ronaldo, Portuguese Ronaldo. He's looking like the Brazilian Ronaldo, freaking scoring goals left and right thanks to Messi. I mean, so far it looks like an amazing move for Messi, and I'm glad he didn't go to Saudi Arabia. Rob Sipe, appreciate your $10 donation. Thank you always for donating, Rob. I recognize you, and thank you always for watching as well. Appreciate you. All right, AMC, we'll take a look at Fragrance 3. What's going on, Fragrance? When does the meeting start? In exactly 9 minutes and 45 seconds. Z, is that your stripper name? Shut the fuck up, bro. Hitting the light, just got here. Sorry I'm late. Drive safe, Chris H. Don't do anything stupid. All right. You guys want to look at gold. A lot of questions on gold. I got to look at the gold chart, I guess. Do you support Arsenal? No, I'm not. I don't really have a Premier League team. I do like, and this might make some of you in London happy and some of you in London sad, but I do like Tottenham. If I did have a Premier League team, it would be Tottenham. But I'm not, I just like watching good football. I don't really, I'm not huge into into supporting a Premier League team. My team is Barcelona, but I do like watching Premier League games for sure. But if I did have a Premier League team, it would be Tottenham for sure. Hi from Edinburgh. What's going on, Dario? Hi from Lisbon, says Rui. Asunsao, what's going on, Rui? Hello from Prague. Noor says, Noor, you're in Prague? For some reason, I thought you were in Saudi Arabia or somewhere in the Gulf. That's dope. I love Prague. I would definitely live in Prague. It seems like a very peaceful and easy life there, for sure. Do you call it football or soccer is a question? It depends on who I'm talking to. Soccer in the U.S., football if I'm talking to people who are outside of the U.S. But fun fact that soccer is actually a British word. It's not an American word. That's the funniest fact of all. Anonymous, appreciate your $20 donation. Thank you so much. Do you support arson? Do you mean Arsenal or arson as in the crime? Y'all are fucking crazy, man. No, I don't support arson, and I don't support Arsenal. And if you are on the stream and you're just joining, hit that thumbs up. We're about to start Jerome Powell in 7 minutes. About to start, so... All right. Hola Z. Regine, what's going on? I haven't seen you in a long ass time. That's what it feels like, at least. Very good to see you. Always good to see you. Kulpreet Singh, always good to see you as well, brother. Marcus, what's going on, man? What's up, man? It's Joe from Jordan. Is your real name Joe? And you live in Jordan? You must be the only Joe in Jordan. Unless you're talking about Joe as in like Joseph, which I can see how a Jordanian Christian might be named that. But if your name is just Joe and you live in Jordan, you're probably an anomaly. Ronaldo Lima is the real Ronaldo. I agree. R9 is the only Ronaldo I recognize. Come on, bro. Chelsea. Okay. Supporting Chelsea is like, I don't know. Chelsea to me is like the good old boys posh London club. That's what Chelsea is, right? If you want a real working man's London club, you support West Ham. You don't support Chelsea or Tottenham. I joined Z's Discord to catch a glimpse of his cake. Onsaid. What do you mean by that? In the U.S., at least in certain cultures, that has a very weird connotation. If you want to see my cake. I definitely don't want to see your cake. Cake. Yeah, bro. Marcus, this dude talking about my cake like I'm fucking Cardi B or something. Like I'm Nicki Minaj. Bro, you ain't gonna see my cake if you join the Discord. I hate to disappoint you. Happy birthday, Z. It's not my birthday, bro. And we definitely don't want to see your popsicle. No, Regina, it's not my birthday. Someone's talking about my cake. I don't know why. I'm only assuming that they are not American and or in tune with hip hop culture. Because if you want to see someone's cake, that usually means something very specific. All right. 3 minutes and 50 seconds until Jerome Powell. So let me look at AMC real quick. Now, I did, funny enough, say that I was buying leaps on AMC in the Discord, and I sent that out July. When was this? Let me look it up. Just so I'm not lying to y'all. I sent that out July 14th. I said leaps for the peeps. Now, the reason is because I noticed, obviously, that risk on stocks were starting to climb. All of the shit stocks, all of the ARK stocks were starting to climb. And I noticed that AMC was in this lull at a major demand zone. That's why I said leaps and not short-term options, because I had no idea when AMC would pop, but AMC was at a historically low volatility, at least since post-pandemic, and it was sitting at this demand zone. So I was willing to just buy leaps and hold them. I didn't know that they would, that we'd get a pop just a week later, which eventually AMC did pop by 33%. Now, I do think AMC will have another run. Even though this pop was kind of fueled by the APE/AMC share news, I do think based on this, we will likely see another pop. I don't know when. I wouldn't buy short-term dated calls on this, but you've seen this when I had sent out the Lucid alert, when I had sent out the alert on Carvana as well. Basically, when you see momentum stocks that have this sort of pattern where you get in huge green volume, and then followed by a retracement that has a decline in volume, right? I don't trade off of volume day trading, but when I'm swing trading or looking at the daily chart, I will definitely look at volume, especially if a stock is in this pattern, where, it pops, has a retracement with very low volume, retraces to, near the 21 EMA. You see another pop, the retracement has another very low volume, then another pop, and then very low volume. These are times which you can take shots. Obviously, this is not an A+ setup, but if we are just trading momentum stocks and you are looking at this pattern, that is essentially what you want to see. We saw this on Rivian as well, right? Pop followed by low volume consolidation, followed by another pop, etc. So, I do think that AMC is following that as well. We got an initial wake up here. We likely will be due for another pop at some point. I that's why I would rather buy long dated calls as opposed to short dated calls. On on the S&P 500, since the Fed released their 25 basis point rate hike, we haven't really seen much movement. We're still in this minus 0.27% range here, right? We have seen these big wicks, which is why I was telling people earlier when they were trying to take trades pre-Jerome Powell that you will get stopped out. Like you would have gotten stopped out. You would have gotten stopped out here, likely, if you have a prudent trade or a responsible trade. You would have gotten stopped out here, right? And earlier in the morning, I was saying actually on the Discord that I will not take a trade, at least on the long side, until this low is broken and we see liquidity taken below that, right? Which we see now. You see the low eventually broke. And now if I was to go long, I would be more comfortable longing, but I would not long before this low and this liquidity was taken out. I'm not longing now. I will tell you if I am taking a trade, I am going to be watching Jerome Powell here. He hasn't yet hit the podium, so he is on deck right now. And then I promise you I'll shut the F up until Jerome Powell talks. But not on deck yet. We're just waiting. I wonder what kind of Rolex he's going to be wearing, by the way. He always wears the... he'll either wear the Submariner or he'll wear the GMT. And I think one other time I saw him wear I wouldn't call it presidential because really the presidential is the gold one with the presidential bracelet. But it looked like a white gold presidential. We'll see. There we go. Let's do this, peeps.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has rates and slower output growth also appear to be weighing on business fixed investment.
The YouTube one is a little on delay.
The labor market remains very tight. Over the past 3 months, job gains averaged 244,000 jobs per month, a pace below that seen earlier in the year, but still a strong pace. The unemployment rate remains low at 3.6%. There are some continuing signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in May, total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In June, the 12-month change in the Consumer Price Index, or CPI, came in at 3.0%, and the change in the core CPI was 4.8%. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning to inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 1/4 percentage point, bringing the target range to 5.25% to 5.5%. We are also continuing the process of significantly reducing our securities holdings. With today's action, we've raised our policy rate by 5.25 percentage points since early last year. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of our ongoing monetary restraint to be realized, especially on inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Mr. Chairman, thank you. You have, I think, a couple times in your opening remarks talked about this language in determining the extent of additional policy firming that may be appropriate. Should we take that to mean that additional hikes are likely on the way? And should we also believe that all future meetings, say September and November, are live, or are you in a every other meeting mode? Thank you.
So we haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each meeting, we're going to be asking ourselves the same question. So we haven't made any decisions about any future meetings, including the pace at which we'd consider hiking. But we're going to be assessing the need for further tightening that may be appropriate. You read the language, to return inflation to 2% over time. I would say that the intermeeting data came in broadly in line with expectations. Economic activity remained resilient. Job creation remained strong while cooling a bit. And the June CPI report actually came in a bit better than expectations for a change. And the June CPI report, of course, was welcome, but it's only one report, 1 month's data. We hope that inflation will follow a lower path it will be consistent with the CPI reading. But we don't know that, and we're just going to need to see more data. So what are we going to be looking at? Really, it will be the whole broader picture. And starting with, we're looking for moderate growth, right? We're looking for supply and demand through the economy coming into better balance, including in particular in the labor market. We'll be looking at inflation. We'll be asking ourselves, does this whole collection of data, do we assess it as suggesting that we need to raise rates further? And if we make that conclusion, then we will go ahead and raise rates. So that's how we're thinking about the next meeting, and how we're thinking about meetings going forward potentially. But we're now mainly thinking about the next meeting. I will also say, since we're talking about it, between now and the September meeting, we get 2 more job reports, 2 more CPI reports. I think we have an ECI report coming later this week, which is Employment Compensation Index, and lots of data on economic activity. All of that information is going to inform our decision as we go into that meeting. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting. And I'll close by saying we've raised the federal funds rate now by 525 basis points since March 2022. Monetary policy, we believe, is restrictive and is putting downward pressure on economic activity and inflation.
If I could just briefly follow up on something you said there. You said the data in the intermediate period, it broadly came in line with expectations. Does that mean there's unlikely to have been a change in the overwhelming outlook of the committee that 2 more hikes are necessary?
I'm just going to go back to what I said. That's the question. We have 8 weeks now until the September meeting, and all that data that I recited, we're going to be looking at all of that and making that assessment then. And it really, we did have the one good reading, and of course we welcome that, but it's just one reading, as everybody knows. And we've seen this before in the data. Many forecasts call for rates for inflation to remain low, but we just don't know that until we see the data. So we'll be focusing on that.
Thank you. Thanks for taking our questions, Chair Powell. Obviously, you upgraded the language around growth in the statement today. We've seen the Barbie movie numbers. We've seen everyone going to Taylor Swift concerts this summer. It seems like the American consumer is in pretty good shape. And it does seem like growth is sort of picking back up a little bit, or at least doing well. And I wonder, from your perspective, if that continues, if we see growth not just stabilizing, but doing performing well this summer. Is that a problem because it's inflationary, or is it good news because it suggests that a soft landing is more likely? Just how are you thinking about that sort of trajectory?
Yeah, so I would say it this way. The overall resilience of the economy, the fact that we've been able to achieve disinflation so far without any meaningful negative impact on the labor market, the strength of the economy, overall, that's a good thing. It's good to see that, of course. It's also, you see consumer confidence coming up and things like that. That will support activity going forward. But you're right, though. At the margin, stronger growth could lead over time to higher inflation, and that would require an appropriate response from monetary policy. So we'll be watching that carefully and seeing how it evolves over time.
Thanks, Chair Powell. Neil Irwin from Axios. So as you referenced earlier, in the intermeeting period, soft CPI, jobs reports, still strong but moderating, JOLTS looks good. So if you're data dependent, why not pause again? Why not stay on hold? Why not take another meeting off when the data was at least cutting in the direction you want to see?
So if you go back to what we're trying to do here, we're trying to achieve a stance of policy that's sufficiently restrictive to bring inflation down to 2%. At the last meeting, we wrote down our individual estimates of what that would take, and the median of that was an additional 2 rate hikes. So I would say we looked at the intermeeting data, and as I mentioned, broadly consistent, not perfectly consistent, but broadly consistent with expectations. And as a result, we went ahead and took another step. And that's a labor market that continues to be strong, but gradually slowing. I mentioned that the inflation report was actually a little better than expected, but we're going to be careful about taking too much signal from a single reading. And growth came in stronger than expected. So that's how we look at it, and so we did take that step today.
Nick Timmeros of the Wall Street Journal. Chair Powell, markets widely believe the median FOMC participants' inflation forecast from June for the fourth quarter of this year will be too high, given autos and shelter, and that by September that may warrant a downward revision in the inflation forecast of 20 to 30 basis points. Would that type of inflation progress be enough to hold rates steady from here, or do you need to see below-trend growth and decelerating labor income growth to be convinced that you've done enough?
So it's hard to pick the pieces apart and say, how much of this and how much of that. We'll be looking at everything. And, of course, we'll be looking to see whether the signal from June CPI is replicated or the opposite of replicated, or whether it's somewhere in the middle. We'll be looking at the growth data. We'll be looking at the labor market data very closely, of course, and making an overall judgment about that. It's the totality of the data, I think, but with a particular focus on making progress on inflation.
If I could follow up, last month you said there were benefits to moderating the pace of increases because it would give you more information to make decisions. Would another CPI report like the one we just had in June allow you to at least maintain that slower pace and defer until the fall any decision on whether you need that second rate hike?
So I'm just going to tell you again what we're going to do in September. We're going to look at 2 additional job reports, 2 additional CPI reports, lots of activity data, and that's what we're going to look at, and we're going to make that decision then. And that decision could mean another hike in September, or it could mean that we decide to maintain at that level. And again, the question we're going to be asking ourselves is the overall signal one that we need to do more, that we need to tighten further? And if we get that signal whenever we get it, then, and that's the collective judgment of the committee, then we will move ahead. If we don't, then we'll have the option of maintaining policy at that level. But it's really dependent so much on the data, and we just don't have it yet.
Hi, Chris Rugaber at Associated Press. So consumer confidence in the economy is rising, likely in large part because of the declines in headline inflation. You also see wages are also rising faster than prices now after trailing them for a long time. How much are Americans truly harmed by inflation at its current level, headline level of 3%? And with that in mind, when do you put some weight back on the employment side of the dual mandate?
So I guess I'd say it this way. First, it is a good thing that headline inflation has come down so much, because that's really what the public experiences. And I would say that having headline inflation move down that much almost creates it will strengthen the broad sense that the public has that inflation is coming down, which will in turn, we hope, help inflation continue to move down. So you were really, sorry, what your question was?
Well, I mean, you've talked for many press conferences now about the harm created by inflation, how hard it is for people. So how much of that are we still seeing with inflation now down at 3?
So I guess I would put it this way. I'd say it this way. It's really a question of how do you balance the two risks, the risk of doing too much or doing too little. And, I would say that, we're coming to a place where there really are risks on both sides. It's hard to say exactly whether they're in balance or not. But as our stances become more restrictive and inflation moderates, we do increasingly face that risk. But, we need to see that inflation is durably down that far. As you know, we think, and most economists think, that core inflation is actually a better signal of where headline inflation is going, because headline inflation is affected greatly by volatile energy and food prices. So we would want core inflation to be coming down, because that's what we think core is signaling where headline is going to go in the future. And core inflation is still pretty elevated. There's reason to think it can come down now, but it's still quite elevated. And so we think we need to stay on task, and we think we're going to need to certainly hold policy at a restricted levels for some time, and we need to be prepared to raise further if we think that's appropriate.
Well, and then if inflation were to, just a quick follow, if it stays at 3 or drops even a little bit more, I mean, how much of an increase in unemployment do you think is acceptable to get that last bit of inflation? People are talking about the potential difficulty of the so-called last mile of inflation. So, but how much unemployment do you think is justified to get down that last?
So it is a very positive thing that actually the unemployment rate is the same as it was when we lifted off in March of 22 at 3.6%. So that's a real blessing, and that we've been able to achieve some disinflation. And we don't seek to, it's not that we're aiming to raise unemployment, but I would just say the historical record, we have to be honest about the historical record, which does suggest that when central banks go in and slow the economy to bring down inflation, the result tends to be some softening in labor market conditions. And so that is still the likely outcome here. And we hope that that's as little as possible. We have to be honest that is the likely outcome. The worst outcome for everyone, of course, would be not to deal with inflation now, not get it done. Whatever the short-term social costs of getting inflation under control, the longer-term social costs of failing to do so are greater, and that the historical record is very, very clear on that. If you go through a period where inflation expectations are not anchored, inflation is volatile, it interferes with people's lives and with economic activity, and that's the thing we really need to avoid and will avoid.
At this point, you say the policy is restrictive, but all year long we have seen growth surprise to the upside, unemployment to the downside, and inflation lately to the downside. So I'm wondering, by definition, should you be restrictive enough right now under these conditions? Do you think you might need to do more? Because I'm curious about what you see as inflation dynamics now. Is the economy still moving in a direction where it creates more inflation? People talk about base effects and higher energy costs, and now we have some large labor settlements. Or is the economy disinflating, and you're able to go back to the old Fed policy of opportunistic disinflation?
So I'll just say, again, the broader picture of what we want to see is we want to see easing of supply constraints and normalization of pandemic-related distortions to demand and supply. We want to see economic growth running at moderate or modest levels to help ease inflationary pressures. We want to see continued restoration of supply and demand balance, particularly in the labor market, and all of that should lead to declining inflationary pressures. Now, what we see those pieces of the puzzle coming together, and we're seeing evidence of those things now. But I would say that what our eyes are telling us is that policy has not been restrictive enough for long enough to have its full desired effects. So we intend, again, to keep policy restrictive until we're confident that inflation is coming down sustainably toward our 2% target, and we're prepared to further tighten if that is appropriate. And we think the process, still probably has a long way to go.
Well, do you think under current conditions you are restrictive enough unless something changes?
Well, I think we think today's rate hike was appropriate, and I think we're going to be looking at the incoming data to inform our decision at the next meeting about is the incoming data telling us that we need to do more, and if it does tell us that collectively, if that's our view, then we will do more.
Thank you. Colby Smith with the Financial Times. If September is in fact a live meeting, how does that square with the need for a more gradual tightening pace that you spoke of last month in explaining the rationale for holding the funds rate steady at the June meeting?
So a more gradual pace doesn't go immediately to every other meeting. It could be 2 out of 3 meetings, right? It just means if you're slowing down. The point really was to slow down the decision cycle as we get closer and closer to, we think, our destination. And I wouldn't want to go automatically to every other meeting because I just don't think I think it's not an environment where we want to provide a lot of forward guidance. There's a lot of uncertainty out there. We just want to keep moving at what we think is the right pace. And I do think it makes all the sense in the world to slow down as we now make these finally judged decisions. And so that's what we did. And so I think it's possible, I mentioned before, it's possible that we would move at consecutive meetings. We're not taking that off the table, or we might not. It's really going to depend on what the data tell us. That's the best we can do.
So we shouldn't assume that every other meeting is the lowest tightening frequency, let's say. It could be, longer intervals in between as well.
I think we're going to I think we're going to make a decision about the next meeting, and then we're going to make a decision about the one after that, and I think it'll sort itself out.
Thanks. Howard Schneider with Reuters. Among your colleagues, there have been people who've said they feel that very little transmission has taken place so far from monetary policy into the economy, and there are those who feel, they say, it's happened very fast this time and it's kind of up to date. Where are you on that continuum?
So there's a long-running debate about the lags between changes in financial conditions and the response to those changes from economic activity and inflation, right? So we know that in the modern era, financial conditions move in anticipation of our decisions, and that has clearly been the case in this cycle. So in a sense, the clock starts earlier than it used to, but that doesn't necessarily change the process from that point on, and it's not clear that it has. I'll tell you what we know and then what we don't know. We know that financial conditions affect economic activity and inflation with a lag that can be long and variable, or lags, plural, that can be long and variable. A lot of uncertainty around the length of the lags, and by the way, that's just one component of the broader uncertainty that we face. So I'll tell you how I think about this. The first thing to say is we're determined to bring inflation down to 2% over time, and
I'm going to let him finish his thought, then I'll remark.
I would look at it this way, though. The real federal funds rate is now in meaningfully positive territory. If you take the nominal federal funds rate, subtract a mainstream estimate of near-term inflation expectations, you get a real federal funds rate that is well above most estimates of the longer-term neutral rate. So I would say monetary policy is restrictive, more so after today's decision, meaning that it is putting downward pressure on economic activity and inflation. We'll keep monetary policy restrictive until we think it's not appropriate to do so. So that's how I think about it.
Funny, nobody has asked about the balance sheet yet. So the balance sheet is still super high, and no one's asked about it yet.
Inflation has proved stronger than we and other forecasters have expected. And at some point that may change. We have to be ready to follow the data. And given how far we've come, we can afford to be a little patient as well as resolute as we let this unfold.
On the credit side, I'm wondering if you saw anything in the latest SLOOS data that made you think you're getting a quantum of credit contraction beyond what you'd expect. The bank lending data really is, the growth rates edging down towards and heading below zero, which is usually a recession indicator.
So I guess the SLOOS will come out early next week, and I would just say it's broadly consistent with what you would expect. You've got lending conditions tight and getting a little tighter. You've got weak demand, and it gives a picture of pretty tight credit conditions in the economy. I think it's really hard to tease out whether how much of that is from this source or that source. But I think what matters is the overall picture is of tight and tightening lending conditions. And that's what this sluice will say.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. Could you break down the reasons why inflation has fallen and what share of that credit you would give to factors that don't stem directly from rate hikes or that might be with?
All right. So he has, as you suspected, he has basically, maintained the stance, as we talked about before, that Jonas Pond says, did you take that, Z? I was outlining it to take it. Yeah, I wanted to short from the golden pocket here. Would have been an amazing short. You were paying attention, which is great. This was on the S&P 500 futures. But yeah, I mean, what Jerome Powell was saying is basically what we suspected, that it's going to be data dependent, 25 basis point rate hike. We haven't yet decided what's going to happen for September, et cetera, et cetera, et cetera. By the way, I did don't see full screen. Yeah, of course you don't. You see this part though. It's because I'm trying to also stream Jerome Powell talking. So I'm trying to fit everything on my screen. I did post, I said, if you guys get this to 1,000 likes, then I will release a discount code I will open up unlimited monthlies for the remainder of the live stream. And I'll release a discount code only for the members of this live stream. If you guys get this to 1,000 likes, because I continue to get asked about monthlies, and we open those when we get a ton of requests, but we don't open a ton of them, because really the only way to join the academy usually is either annual or lifetime. So if you get this to 1,000 likes, then we will open up the monthlies. Now, obviously, the monthlies don't get access to certain things like the mastermind calls, the courses, whatever, but you will get access to my analysis and the alerts and the chats, etc. So get this to 1,000 likes, and I will open up unlimited spots for the remainder of the live stream, and however many people sign up, and then I will close it. So there's 1,740 of you here. You can get it to 1,000 likes. We just need 160 more likes, and I will send out that discount code right now in the chat. Is that for the mentorship? No, the mentorship is only 20 people. And that is something that, we take, that is something that we take waitlist for, and there's a application process, et cetera. But this is just for, access to the alerts, the analysis, the chats, et cetera. Conscious investing. Hope you and your lady are doing well. Appreciate you, man. Thank you so much. Yeah, it's up to you guys. 116 more likes and I'll do it. I will open up unlimited discounted spots. But yes, Jonas, I didn't take this, unfortunately, but I was highlighting it, thinking about taking this. It was basically just a GP short, as you probably and rightfully saw. Whoops. It was basically this. This is what I was looking to short here. And Jonas is actually one of the students in the mentorship. So, yeah, based on what we learned and what we discussed, we took out these highs, these Tuesday, July 25th highs from yesterday. We took them out with liquidity above. So that means that I was looking for a potential short, and that was the short that I was looking for right here. That would have netted 9 points, which is about $450 per contract on the S&P 500. I kind of wish I took it. I was, just mapping it out, deciding whether to take it or not, listening to Powell, etc. And, even though I didn't take it, that was a short. 95 more likes, guys, and I will put that down. I will put that coupon link in the chat, and you will have access to it. Can you explain how you draw your fib? Robinson Melendez, stop talking crap. I'm teaching you how to trade the markets. You can hop off the live stream, Robinson. You can go watch JP on your own. I covered a lot of Jerome Powell, and we basically got the gist of what he said, which is they raise rates 25 basis points. It'll be data dependent. And that inflation is still sticky. But feel free to kick rocks, bro. We don't like that negative energy here. What's up with that guy? I don't know. He's just mad. Diz, what do you want me to do on Diz? I'm not day trading Diz, but I do think that Diz might be on the cusp of selling puts here. We are at COVID lows on Diz. This is where we hit at the bottom of 2020. This was also where we found support in December 2022. I will likely sell puts on Diz. Right now it's trading at 85. So if I look at Diz's options chart, let's see. No, I don't buy calls. How much for the mentorship? You have to apply to the mentorship, but for the Discord, if you want access to the Discord, there's 59 more likes, and I will release a discount code, unlimited, bro, for the remainder of the live stream. Unlimited number of spots, and it'll be extremely discounted, 25% off. But on Diz, what I'm looking at is let's see. If I do October, I can sell maybe January. I can sell the 85 calls on, or 85 puts, sorry, on Diz for about $540 per. That's what I will likely do on Diz, is sell those January 24 $85 puts on Diz. But yeah, I do think it is good to dollar cost average. The thing is, like, these stocks that are beaten up like this, nobody wants them, until they start rallying. But when nobody's interested in them, that's when to buy. Like, this is the same thing that we did on Oxy. Right? Guys, 1,400 people here. We just need 48 more likes, and I will release that discount code for you guys. And I will also release, like I said, unlimited monthly spots before we close them up again. So, we did this on Oxy as well. Oxy was a stock that the last stock that I invested in was Oxy, and it was when Warren Buffett made his big buy as well, which was below $60. Oxy traded as high as $64 yesterday. And this is a dividend paying stock. So you want to buy sectors and stocks when nobody's looking at them. Okay, 19 more and I'll release them. So energy, for instance, was a sector that we invested in. Financial was a sector that we invested in. That one just continues to rip. If you look at when we invested in XLF, it was during the height of the banking crisis, right? Now, regional banks were a little more risky, even though those have been killing it as well, unsurprisingly so. But when the Fed came in and backstopped all banks, and we knew that banks weren't going to fail, that was the time to get into banks, in my opinion. So we bought, very strategically buying certain sectors and stocks. We bought XLF, we bought Oxy, and then we also invested in sectors like XLU, which, so far haven't seen the gains that the tech sector of the S&P did. So yeah, there are sectors of the S&P that, have yet to rally, and I think are being rotated into, right? So good night, Deepak. Good night, brother. Can you explain why you chose put? Is it because 52-week low? No, because I don't like to buy calls. I like to sell options. It's much easier to make money selling options because most options expire worthless. So, Yeah, 4 more likes, and I'll release that discount code right now. But I'm not choosing to buy a put, Manu. I'm choosing to sell a put. Any play for Roku today? What are they? All right, you guys did it. 1,000 likes. Here's the coupon code. So I will keep this open for the remainder of the live stream. I will also open an annual and a weekly option. And use the code July. Hold on, I'll put it here. Use that code at checkout. Yeah, use that code. Oh, wait, I fucked up. Hold on. 1 second. Let me get the code again. Hold on. If you try that now. Okay, 1 second. July live percentage 25 off forever. Okay, now that should work. That code should work. There you go. Man of my word. What did Powell say? Market is dropping. Philippe, you're not paying attention. That was the short right there. That was the short I was eyeing right here. God damn it, Jonas. I should have taken that. Woo! That was it.
Of regional banks, including Silicon Valley Bank, failed. When you look at credit conditions now, given Bank of California's acquisition of PacWest, does this acquisition suggest the full impact has not been felt, or are you comfortable saying that we've seen most of the ripple effects that may have occurred at this point, and how does this play into your outlook for policy?
So I don't want to comment on any particular merger proposal, but I will say things have settled down for sure out there. Deposit flows have stabilized. Capital and liquidity remain strong. Aggregate bank lending was stable quarter over quarter and is up significantly year over year. Banking sector profits generally are coming in strong this quarter. And overall, the banking system remains strong and resilient. Of course, we're still watching the situation carefully and monitoring conditions in the banking sector. In terms of the actual effect on, if you think of a particular set of banks that were affected because of their size and business model and things like that, that were more affected by the turmoil in March than others, it's very hard, as I mentioned, it's very hard to sort of tease out the effects on this very large economy of ours from them tightening. They may be tightening a little bit more, probably are, than other banks. The SLOOS has been telling us for more than a year that banking conditions are tightening. That process is ongoing, and that will restrain economic growth. So I think we have to take a step back from. I can't separate those anymore. I think basically we're just looking at the overall picture, which is one of tightening credit conditions, and that's going to restrain economic activity. It is restraining economic activity. So that's how I would look at it.
And how is that informing your outlook for setting policy?
So I think that is an expected result of tightening interest rate policy, is that bank credit conditions, bank lending conditions would tighten as well. And so the question is it more effective this time because of what happened in May? I just don't think we know that. I think we're looking at the current data in GDP, and we're seeing strong spending. We're seeing a strong economy, and it's made us confident that we can go ahead and raise interest rates now for the third time since the March events. It seems like the economy is weathering this well, but of course we're watching it carefully. And
God damn it, that was a short, man. That was the singular short, the only opportunity that the market provided. Right at the golden pocket. Took the short, I'm out 300%. What's going on, Joe? Good job, bro. Good job, bro. Ay, ay, ay. That was it. That was it. There was no other optimal short there. Can you explain why you were looking? Yeah, I was looking at that short because as I was saying at the beginning of the live stream, we took out these highs here, right? Now, if you analyze the market on a day-to-day basis and you're looking at intraday charts, the market is just a series of taking liquidities, right? From the buy side to the sell side, et cetera. And this is something we just went over in the mentorship, was explaining liquidity. But you always see, it takes it from the sell side to the buy side to the sell side to the buy side, et cetera. If that wasn't the case, then the market would just move like this. Like, why doesn't the market just move like this? Why does the market intraday, if you're looking at, 5-minute charts, why does the market move like this? Right? And it's because it's just a series of institutions taking liquidity. That's why you see that. Now, this right here is just after hours, so this doesn't count. But during the day, that's why you see that craziness. So what I wait for before taking a broad-based long or short is I wait for either highs to be taken out, right? And then I look for a short after, if we do confirm a drop below that. And same thing on this side, right? I look for lows to be taken out. Like these lows were now taken out. And you see liquidity here, right? You see institutions grabbing everybody's sell stops in order to potentially go long. And that is essentially when you want to long. You want to long at a discount and short at a premium, right? So that was the start of the reason why I was looking for that short. And then after we retraced, I was looking for a point of retracement. And, for me, I'm a huge proponent of Fibonacci's, especially the golden pocket. So I drew the Fibonacci, and this is the point at which I was going to short. And I got caught watching FOMC, answering questions and stuff. But this was the short for me, right? This is why I was eyeing that level. And yeah, glad I missed it. Not really, but I took the short with SPX, made 100%. That's awesome, man. Appreciate you, Joel. Thank you for sharing that. Aman Jala, yes, I already put the link in here. Here you go. Here's the link. Here's the link. I'm putting it right now. Click that link. Use the code July Live. This will close after the live stream, and that will give you 25% off. How was I drawing that? Fib. I drew that fib like this. I just clicked on fib, went from the top to the bottom where the retracement started. Now the bottom is this and the top is this, because I'm eyeing here. Let me do this. This might be easier for you. Once we started retracing, I want to know, like once we started bouncing, that's why I took the bottom here. I want to know how far up we're going to retrace into before a move back down, right? And that's what I was eyeing there. That would have been a fucking sweet ass short. My God. I am happy that some of you took it, especially those of you that are Discord members. But yeah, I don't see the MSS. There is no MSS. I'm just front running a liquidity grab and a retracement on a news day. Not really turtle soup. It's being able to front run liquidity. Guys, it's not MSS. I'm just front running liquidity. That's it. Joel Flores, thank you, Z. I'm in the academy too. Awesome. I'm glad you played that with SPX. Thoughts on longs here for DKS? I don't know, bro. I don't know. I don't know enough about this. Also, this chart looks ugly and near the top. I don't know. I don't like to get cute with investing in stocks. Like, I'm a very boring investor. I would like to think an exciting trader, but I'm a very boring investor. I don't really like to I don't try to pick stocks, right? All I do is oh, you know what I could do? I know what I could do. All I do is invest in blue chips and indices. Here, I'm going to pin this. That's what I'll do. Use code July Live. Let's see if I can pin this. I can't. I don't know. Oh my God. Alex, not MSS. There is no MSS. I'm not looking at MSS. All I was doing was looking to see where there's a liquidity grab, which I spotted, and then a retracement into a golden pocket. That's all I was seeing. I'm not looking for MSS. I don't need MSS on a news day. What level do you draw that? I just went over it, Gord. Rewind the tape. What are the levels on your fib between in the golden pocket? 0.618 and 0.5 and 0.65. Here, I'll show you the settings. Would you invest in CHPT? Sonar? Bro, I just told you. I'm very boring when it comes to investing. No, I would not invest in CHPT. Why would I stock pick? That's the biggest waste of my time. Yes, I do think that is the last rate hike. FFHD. I definitely do. I don't like to stock pick. Stock pick is a waste of time and money. Right? Like, okay, let's just say .com boom. Okay? Let's say that you bought Yahoo, you bought Lycos, you bought Google, you bought I don't know, Jeeves, you bought AOL, right? Like, you're going to be right on one of those. And the entire time I'm wasting buying all this other shit that most of those companies are delisted now. So I don't like to look at I don't like to look at companies and try to guess, would you invest in this market? No, I don't care. I just invest in the S&P 500 and I let I let the market itself dictate what's a good company and what's not, right? Like, the companies in the S&P 500 and the NASDAQ are continuously rotating. And they are being rebalanced based on, there are very strict restrictions on what companies can make it to the S&P 500, right? And when companies don't perform, like Yahoo, for instance, they get delisted and replaced with a company that's performing. So why would I waste my time stock picking? I don't care to do that, right? Like I already have a track record. It's called the S&P 500. Here's the monthly chart of the S&P 500, literally going back to 1871, where it opened at $4.50, and it is now trading at $4,500, right? It's just one shot straight up. So for me, I don't care to stock pick. So no, I'm not looking at Charge Point or Beyond Meat or whatever I don't care. VU is just the S&P 500, and it's managed by Vanguard. So yeah, I like it. What other thoughts are you looking for? Buying opportunity in QQQ? What, like 6% from all-time highs? Now you're asking? You know what I mean? Like, no, this is not an opportunity. It's, yes, you can dollar cost average in the market. And if you don't have a lot of time or have less experience, you probably should just be dollar cost averaging the market. But is this an opportunity? No, you were buying near the highs. It's not like a great opportunity. But if someone says I buy into QQQ every 2 weeks, awesome. That's amazing. You probably will be very rich come retirement time. Are you mostly trading options? Futures and options, yeah. What do you think about UVIX at the low of lows? No! The VIX is not at the low of lows. Stop saying that. I know you just joined. The VIX is not at the low of lows. Like, why is the VIX breaking people's brains? Look at the VIX, okay? Look at the VIX during normal markets. 11, 10, 9, 9, 9. 9, even 8 something, 10, 9, 10. The VIX normally trades like this. The VIX is not a stock. The VIX is not an index. The VIX is just a percentage. It's a percentage calculated from what SPX options bettors are expecting in terms of volatility, right? If they are expecting black swan events and uncertainty and all this shit, then yes, they are going to bet that way on SPX options and hedge a ton, right? The VIX is not manipulated. The VIX is not broken. The VIX is not at historic lows. The VIX normally trades between 9 and 10, okay? So please get that, look before 2020. The only reason people think VIX is at lows is because 2020 was uncertain. 2021, we hit a bull market. 2022, we hit a bear market. Things were uncertain, right? Nobody was bullish in 2022. So the VIX was routinely trading in the high 30s. The VIX is not broken. If you are in a bull market, the VIX is supposed to trade near 10. It's not broken. Also, look at this. I highlighted this quite a bit. But look at the S&P futures bearish bets, right? We were at all-time highs in February at around minus 434,000 bearish futures bets, and that has now halved. And as I was saying, as this continues to go to near zero, the market will likely go up, right? So there aren't a lot of bearish bets on the market. I mean, look at anything. Look at if you look at, for instance, put call ratio. What is the put call ratio right now? Oh, shut the fuck up. Put call ratio right now is 0.58. So there aren't a lot of bearish bets, right? That is why the VIX is down. And no, the VIX is not an investment. The VIX is not historically low. The VIX is not broken. The VIX is not manipulated. This is how the VIX trades. You like Meta at this price? Wow, you guys are really asking about things at their lows. Meta is up this year 235%. No, why would I like Meta at this price? If you really want Meta, buy it when nobody wants it. No, I don't like Meta at 300. High IV on Meta. This is a good question. Z, I still live in Hollywood. Where should my next apartment be in? I don't know. Next to the beach, if you can afford it. High IV on Meta, how to play IV Crush. You play IV Crush with the Iron Condor or selling options, right? Like, I would rather sell calls if you have Meta shares. You know, Meta has closed this gap, so I'm not worried about this as much. But, you know, you can sell. If you have Meta shares, I would actually sell calls. Let's see what we can sell calls for. Oh, hell yeah. You could sell the 330 calls on Meta for almost $700 each. That's wild. That is a good bet right there if you have Meta shares. That's free money. Wow. If you have Meta shares, that's free money. Otherwise, yes, selling Iron Condors is probably what you want. There aren't many IV-friendly strategies. But selling strategies are them. What expiry on Meta? August. But you have to have shares. You can't sell naked calls. Well, you can, but you'll likely end up in the soup line if you're wrong. Yeah, cannabis stocks, I think that's a good sector bet. But yeah, who knows when that's going to change. Crude oil. Like I said, I'm invested in Occidental Petroleum. Crude oil today is slightly down. I do. Crude oil futures can rip your face off. They really can. They are crazy like that, but I like Occidental, right? Like, I mean, what, you're going to argue against Warren Buffett? I like Occidental, and this Friday, I think we have Chevron and Exxon earnings. So, yeah, we will definitely see. But I do like either Occidental for me or XLE, right? So I invested in both XLE, Occidental, and then, as I said before, XLF, which is the financial sector of the S&P 500. Z, when you come into Dubai, I come there pretty often. So maybe November. What is your thoughts on buying TTCF? I hope you're joking. TTCF is now it's traded like they'll give you like a free movie ticket and a Costco hot dog if you buy TTCF. It's a pink sheet. Hassan says you need to stop answering Vic's questions for your mental health. Yo, Z, I know you hate thoughts questions, but did you check the Braves out? The Braves? What? Like the Atlanta Braves? I don't know what you're talking about, Francisco. I might disappoint you. I'm not the biggest baseball fan. I do like the Dodgers, but that's home team. Dubai full of traders. No. Dubai's full of wannabe traders. Trust me. I know this. It's full of wannabe traders and people that are laundering money. Thoughts on thoughts. Powell hinted at rate cuts coming next year. Let's see.
That hangs a bit like an anvil over the head of the market, the idea that you could get another quarter point down the road.
Jeffrey, what's your reaction to that?
I agree with that. I think that today's meeting I would characterize as being as bland as you can possibly get in that basically the answer to every single question is data dependency, which makes a lot of sense to me. The 2-year yield has not gone to new highs. The 10-year yield is lower than it was a year ago, or about the same as it was a year ago. And so I think the Fed should be data dependent, and they don't have a preconceived conception. It's quite clear to me. And I certainly agree, though, that they don't want to loosen financial conditions. But financial conditions have loosened. If you look at some of these indicators, and it's largely because, like, the VIX index is down. It's that volatility is down. That's one of the biggest drivers of why financial conditions are looser. So they actually are pretty loose if you look at those charts. And I do agree that the Fed wouldn't want to get a more overvalued, say, S&P 500 with a big running of the horse, as Steve uses the analogy. Because the S&P 500 is, I mean, people are expecting earnings to go up by 10% or so next year. But if they don't, if they only go up by half of that, you're looking at a pretty high PE, even on a forward basis of probably 21, 22 times. And that's kind of a lot. But if they don't, a lot of this is driven, of course, by almost a mania type of feeling with that burst of the AI, the acceleration of the AI stocks, which reminds me a lot of the dot-com situation. I mean, it might end up being an excellent moneymaker, just like the dot-com stuff, if you held on to it. Went to new highs, and someone did super.
All right, so another September decision could be another rate hike or remaining where we are. This is not really news. This is not really news. Let me take a look at ES, see if there's an end of day trade, since I fucking missed the huge ass short. What a beautiful short it would have been. My God. Ah, my God. All right. Well, tomorrow's another day. Not really much to trade here. I think the move has been made. NQ is looking a little risky. I can't in good conscience long this, even though we took out these lows. Because we have a pretty big imbalance here, right? Which is basically this. So I will wait on NQ. I could scalp it short from here. Probably not going to play like a broad-based short, but if we get to the tip of this, so it will look something like this. $3.5 to 1 trade. I could scalp it short. Not sure if I'll take it, especially after hours. But we'd have to get to the really, really tippy top of this imbalance for me to take this. Otherwise, I wouldn't take it. All right. Green Day tomorrow. Who knows? Who cares? That's not how trading goes. We will find out tomorrow, and we will trade it. Earnings release. Okay, here's what I want to look at, actually. So we have Meta releasing earnings. We have Meta releasing earnings. Now, here's what I want to look at Meta. And by the way, I'm potentially working on an app that will not only provide flow, options flow and whatnot, but will also provide like IV crush, statistics on, what are winning options trades for earnings, what the stock usually does for earnings, et cetera. So I am thinking of working on this app, potentially, coming out with an app that has a lot of features that, I think we're all used to options flow apps now, like Cheddar Flow or Unusual Whales, but something that you can actually use if you are a serious options trader that has, average implied volatility crush, what are successful option strategies based on previous earnings, et cetera. What is the expected move? Not just, we see a lot of calls on, Snap or whatever. So, pretty far away from it, but I will let you guys know for sure. All right. So in terms of Meta has an implied volatility crush after earnings of 38%. This is very fucking high. This is very, very high. So I will likely not buy puts or calls. And here's another thing. Usually Meta doesn't meet the expected move. So only 33% of the time has Meta beat the expected move. Otherwise, it trades rather mute. Now, when it does beat the expected move, it absolutely murders it. So for those of you that are part of the academy, you remember that the one of the most profitable plays that we ever had were on Meta puts. And it was the time when Meta dropped. Let me see. I'm gonna try and see if there's a play I can formulate so I can send out to the academy. It was February 2022. It was when they found out how much money Meta had burned on the metaverse, which is what I suspected for this earnings. I try not to guess what's going to happen on earnings, but this to me I was very confident about. And Meta had dropped 26% in one day. This is when it went from in the low 320s to this is when it first dropped below 300 to like 244. I remember we made like, I want to say like $4,000 per contract or something crazy like that. So when Meta does beat the expected move, it actually does it very convincingly. That's what makes Iron Condors kind of tough to trade here, but the real prudent trade here is selling calls against your shares. So I'm likely going to do that. I'm likely going to sell the 330 calls on Meta. And that way I can collect potentially some free money. But if Meta is above 330 by expiration, I will let go of my Meta shares. But I'll do so for a good amount of profit. So in terms of an Iron Condor, let's see if we can formulate one. So the expected move is plus or minus $25. Plus or minus $25. Let's see. All right. So if we sell, let me see. So expiring tomorrow, or sorry, expiring Friday. So July 28th. That's 28 delta. Let's see if we do 285, 280. So that's 30 delta. And then 320, 325. I mean, that's not bad. You know, for 30 delta, we're collecting $3 out of 5. That's fucking amazing, actually. That is amazing for a 30 delta trade. I might do this because even if it's a losing trade, I'm only losing $2. What if I change this to 275 and this to 280? And I change this to 330 and this to 325. Buy some more cushion. Then we're looking at 237. I might do this Iron Condor. I'm gonna send it out in the academy. I might modify it a bit before I send it out, but yeah, that's what I'm gonna do right now. Are you gonna take short on NQ? You missed it, Gold Trader. You definitely missed it. The short was the one that I highlighted earlier. Who you got for October? Kamzat or Paulo? Dude, okay. Kamzat to me is going to kill Paulo Costa. If you look at the way after the Izzy fight, Paulo Costa just doesn't look the same, right? Izzy completely exposed him. He's strong. He's probably definitely juicing. And Izzy completely destroyed him. But if you look at how Kamzat looks versus an elite fighter like Gilbert Burns, I think he'll kill Paulo. He'll kill Paulo. If they try to stand up, I think Paulo has a good chance of hurting him because Paulo is a brute force striker. But if Kamzat doesn't try to mess around, I think he'll just kill him. Z, start a fund. I'm in the app building business, cyber network. Start a fund, low entry so everyday people can invest. What do you mean low entry? I wouldn't have the ability to fix the pricing unless I want to go to jail. You're in the app building business, cyber network. Eddie, do you work on SaaS products? Eddie Turner? Anonymous donated $20. Appreciate you, man. Mohanna, thank you so much for your donation as well. I'm trying to see if I missed any donations. All right. Crawford or Spence, man, Cesar, this is like when they did Mayweather and Pacquiao. It was too late, bro. They did Mayweather and Pacquiao way too late. And I feel like Crawford and Spence, just like boxing is shit. This is why the UFC is amazing. The UFC is amazing because the UFC makes fights that people want to see, right? In boxing, everyone controls their own destiny so they can avoid all the fights they want. I'm not shorting this, bro. Someone said you're missing the short. I'm not shorting this. I said I might scalp this, but it'll be tough for a broad-based short. So I'm not missing that because I'm not taking it. And plus, there's 15 minutes left, so I wouldn't take a trade here. Costa's a much bigger guy with crisper striking, good takedown. Izzy made Costa look like a sparring partner. I fight you for charity, MMA rules. How much you weigh, Mr. Nice Guy? Also, I should state, like, I'm not. I love MMA, but I'm not trained in MMA. I've done boxing most of my life. Tamale Dog Media. Yeah, Costa looked like he was, this is what happens when people do a lot of steroids, is it has an effect on their stamina. And he's definitely on steroids. Kamzat is gonna ragdoll Costa. Yeah, you see what he did to what is that Chinese fighter? I can't pronounce his name. Fight Meet Kevin for charity? Bro, that wouldn't even be fair. I'd fucking kill that guy. Eddie Turner, if you're serious, bro, hit me up on IG. Check out my IG link in the description. Direct message me on IG. And we could talk about that. Lee, yeah, Rumor. I know, Lee, but not just Lee. His actual name, Jin Yang Lee? I don't know. Hopefully I didn't mess it up. But yes, he picked him up like he was a ragdoll. And he picked him up and then he walked over to Dana White and started talking shit while this full-grown man is in his arms. All right. I'm going to sign off, guys. I love all of you. I'm going to sign off because I need to put out a couple of trades in the Academy, especially for Meta earnings. There's a really juicy one with high premiums. So I need to put out a couple of Meta trades before market close. Also, I did here, I will send it again. I don't know if any of you took advantage of it, but if you want to be in the Academy, I am releasing a coupon code right now. Use coupon code July Live, and take advantage of this, because once the stream is over, it's over. So, but I appreciate you guys. Thank you guys so much for joining. Most importantly, thank you to all those who donated to St. Jude's. So thank you so much for that. Yeah, this was a scalp I was talking about, but not really a broad-based short. Thank you so much for that. Thank you for joining, and I will catch you guys soon. Those of you in the Academy, I will see you in there in a second. But stay safe out there, traders. Peace.